Is my money safe? The Federal Reserve and the president himself telling them the answer is yes. And right now, the Dow is roughly flat following the collapse of two banks in recent days, with several others suddenly on shaky ground. In fact, some regional banks have cratered, losing 60, 70, even 80% of their value. I want to bring in NBC's Carol Lee covering the White House. Stephanie Ruhle is NBC's senior business analyst and host of The 11th Hour. And Anna Palmer is co-founder of Punchbowl News and an MSNBC contributor. Great panel to have, Stephanie. If people come to you, and I'm guessing they already have, and say, is my money safe? What do you say to them?
Just send it to me.
Yeah.
That's what I usually say. Okay, so here's what we know. Before yesterday, the FDIC has always insured up to $250,000. So for most people, you don't have more than that in your account. But what's actually happened over the last few days is one single bank with really lousy risk management and kind of flaky depositors just changed the financial system, maybe forever. Right. So the Biden administration came in and said, we're going to make you whole. We're going to guarantee the depositors of this bank that we're going to give you all your money. So you're asking, why are people panicked today? What's happening to some of these smaller banks? Well, if you're the average American and you're saying, well, hold on a second. Joe Biden just guaranteed people who go to Silicon Valley Bank. But what about me? I go to a local bank. I go to a community bank. Are they definitely going to guarantee me? Well, the president hasn't said that. Right. And if Congress wants to change its mind and say, well, the FDI insurance is going to be unlimited, well, that's something entirely different. But what you're seeing is a lot of people today who says, yeah, it's good that the Biden administration did that for them. I'm not sure what this means for me. And so you're seeing a lot of people continue to pull their money out of some of those smaller banks into the bigger banks. And that's not a good thing for the system, especially because they might not need to do it.
OK, so let's look at an example of exactly what you're talking about. Anna, this morning, there were some pictures out of Wellesley, Massachusetts. It shows people lined up outside the Silicon Valley bank branch trying to get money out. They actually brought in police officers to handle the crowd. Now, these pictures were taken right around the time that the president was saying, don't worry, your money is safe. So give me your sense of where we are. And Punchbowl did a deep dive on this.
Yeah, absolutely. Clearly a lot of anxiety just from the consumer front. And that obviously has a ripple effect when it comes to what Washington is going to do in particular on the regulatory side. Representative Maxine Waters, the top Democrat on the House Financial Services Committee, was out this morning floating a couple of different things, including potentially saying that the FDIC insurance should cover all deposits, not just that $250,000 amount. I think it's also, you're going to see Washington investigate, dig deeper in hearings on, are these banks well capitalized enough? What is the amount that regional and smaller banks should have? And there's certainly going to be a lot of conversations about that. The Treasury Department is also briefing Republicans, they briefed at noon today after there was some frustration on kind of over the weekend, some of the briefings that Republicans and their staff didn't hear about. So the administration's clearly trying to make an effort to make this less partisan and try to make sure that they feel like the Republicans are read in at this point.
Chris, there's one problem. So let's say the government says we're going to guarantee all deposits up to infinity. If you run a bank, why are you going to risk manage it all? Right? Why aren't you just going to throw caution to the wind and say, I'm just going to bet on black? Because if we lose it all, the government is going to be there to backstop it. So it's a great idea in theory, but the devil is truly in the details. And that's going to be the devil here. Who's going to pay the price? Are the executives at Silicon Valley Bank going to pay the price? Are regulators going to pay the price? Because at the end of the day, yes, a lot of individuals and mom and pops lost out. But you know who else lost out and got rescued? A lot of big tech companies, a lot of big VC firms that made bad decisions. So this is highly political.
Well, let me ask you about something you just said before, which is this could change the banking system forever, right? How much of whether that happens and how it happens depends on the first thing you said and the pictures we saw. If a lot of people suddenly go into their bank and either put their money under the mattress or take it out of a small regional bank, maybe one that's actually really well run and secure.
100%. And we don't want that to happen, right? We don't want to be, right? Isn't the government trying to get away from monopolies? And if what's happening right now is everybody just floods and puts all their money into three big banks, that's not what we want to happen, right? So it's complicated because you want those smaller and regional banks to exist. But in 2018, under Trump, they rolled back a bunch of Dodd-Frank regulations to make it easier for those banks to operate, which makes sense. But the answer isn't all regulation or no regulation. It's smart regulation. And then once you have regulation, the regulators need to do their jobs.
All right, Carol, I want to play another part of what President Biden said this morning.
The bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you, we will not stop at this. We'll do whatever is needed.
But, Carol, the president didn't take questions, and he wasn't specific about what more his administration was willing to do. So what do we know about what else might be on the table?
Well, Chris, the president was trying to instill confidence in consumers to avoid all those scenarios that we were just talking about. And so he's essentially saying that, or suggesting that if there were to be more incidents like this, he's trying to isolate this problem. But if there were to be more incidents like this, he's suggesting that he's willing to take additional steps and do more. Specifically what that is, the White House has not said. But at the same time, you have the president promising that taxpayers are not going to bear any burden of these costs. And so that's something that he's going to be held to going forward, regardless of what happens and what else additional crises the president might face in terms of the banking system. But he's really trying to focus this on customers and small businesses. So what the White House and the administration don't want is to be cast as the president bailing out big banks. He specifically said that this is not for investors, that they took a risk, they gambled and they lost, and that's capitalism. That's what the president's message was. At the same time, he's saying that there will be a look back at how we got here, how this happened, saying that he will ask Congress and regulators to strengthen some of those rules, and that those who are at fault for this will be held accountable, Chris.
Anna, there's fixable, but what's Congress really willing to do? So what do you think now? Does this change the calculus at all? Does it suddenly inspire some sort of bipartisanship if the phones are ringing off the hook in congressional offices with people, constituents, voters worried?
I think it's a little too early to tell, to be honest, right? The Senate is in. They're just coming back. They're hearing from certainly constituents. The House is out this week. But just last week, you had Senator Tim Scott sending a letter about maybe, not needing as much regulation here, not needing as much capital. And so it's hard for me to see House Republicans in particular make a big effort here, which would be a necessary component for some kind of a bipartisan package. I would look to the fact that a lot of Republican leadership has been very quiet so far when it comes to calling for either more regulation or the fact that there's been a lot of criticism about this being a bailout or government intervention. And so those kinds of words and those kinds of kind of the shadow boxing that happens in Washington makes me skeptical, at least in the short term, that there's going to be any kind of large bipartisan package.
So short of that, where are we going here, Steph?
That remains to be seen. But when you talk about Republican leadership being somewhat quiet on the Senate side, you might say it's because you're seeing a whole bunch of Republicans run around with an argument that's absolute nonsense, that this happened to Silicon Valley Bank because it's woke. Because it's woke. There's an op-ed in the Wall Street Journal today. Well, listen, they were focused on having diversity candidates on their board. Had they not been focused on DEI, they wouldn't have let that happen. That's absolute nonsense and garbage. And I can't imagine the likes of Mitch McConnell or Tom Tillis, John Cornyn are going to buy into that. They know how banks operate. They know who these people are. And that's garbage. Why did this happen? Because they had they had one single group as who all their depositors were, startups in tech, and then they took all their excess capital and they bought treasuries just before the interest rate hike. They made horrible moves, communicated it horribly, and then boom, in the age of technology, there was a run on the bank that shot them down. But for any Republican that's arguing it's because the bank was woke, find another argument.
More to come. Thank you so much, as always, Stephanie, Carol, Anna, all of you. Thank you so much.